Hello everyone, good afternoon. Welcome to this You Overseas Home webinar. My name is Seb Bampton. I'm one of the account managers over here at You Overseas Home. Thank you all for joining us. I know the sun is shining outside in London at the moment in the UK, so I appreciate your time on this Thursday afternoon. Today we're lucky enough to be chatting to Malcolm McDowell from Chase Buchanan Wealth Management around your financial considerations when moving over to France. It's great to have you all here with us, whether you are watching live or on demand. Once Malcolm has shared his presentation, we'll open up the floor to any questions you may have. At the bottom right-hand side of your screen, there should be a questions tab. So please feel free to click on that tab, ask many questions as you'd like. We will try and get around to all of them, but if we don't, we will pass those questions across to Malcolm at the end of the Q&A for him and his team to follow up with you on a one-to-one basis. We've got about 30 minutes, so I don't want to spend too long talking, and we've got quite a lot to cover. So Malcolm, I'll pass over to you. Thanks again for joining us. If you want to go take it from here and introduce yourself and the presentation.
Lovely. Okay, so good afternoon, everyone. Glad to be here. Okay, so I'll get stuck into the presentation straight away. Let me just make sure it's all working and all that. Excellent. Okay. So before I get into that, I'm just going to do a little bit about, and I'll keep it very brief, about Chase Buchanan, about me in particular. So and it's important with regard to licensing. So just so you guys understand, most of the people on this call, not all, will be based in the UK, thinking of going to France. Some are already in France. But just bear in mind, we are a MiFID regulated company. That's Markets in Financial Instruments Directive. So although you will see us on the FCA website, we don't use that license to advise people, because the people we advise are either going to be tax resident overseas or are already tax resident overseas. Also, a very important point, since the lovely Brexit, you cannot use an FCA license to advise someone who's going to be offshore. Okay, clearly states that on the FCA website. So passporting with an FCA license has stopped. So we use our MiFID license to advise people. Okay, and we're based over in the European Union, and we use that. I'm based in the UK. A little bit about me, so keep that very brief as well. I've been doing this for more years than I care to remember. A couple of decades now. I've lived in 7 different countries. So been there, done that, got the t-shirts, ran it away again. France being one of them, but others as well. So everything we're about to talk about today, I've been through myself, and not only been in France and gone through all the things we're about to go through, but also advised in those countries as well. Came back to the UK just over almost 5 years ago now, just before COVID, which was fun, and now basically based here and giving advice for people overseas. So enough about that. Let's get on to the interesting stuff. Okay, these are the sort of things that we do. Just to give you an idea, but what I want to do today is just cover all the things that you need to think about and need to get your ducks in a row with regard to when moving to France. Okay, so a little bit, some more stuff there. That's all very nice. Let's get on to the interesting stuff. Let's start with the income tax. Okay. All right. Okay. So these are tax bandings in France. Easy enough to find out about with a simple Google search, but they are changing on the 1st of January every year. So unlike the ones in the UK, which tend to be quite static, these move around. They're supposed to go up with inflation. So just to give you an idea, that first one at the bottom at 11,294, at the top at 11,294, which is the equivalent of our UK nil rate band, that was 10,777 last year. Okay, so on the 1st of January, these things move up, and they move up with inflation, supposedly. Okay, so they do creep up. So the French are a little bit more active in that regard, and there's a few more changes going on in the French tax arena, a bit more than what goes on in the UK generally. And then you can see those particular bandings increasing as we go through. And like I said, on the 1st of January, they will move. state the obvious, but I'm going to cover it just in case. You know, the UK, the financial year is different. Okay, so 6th of April to 6th of April. So just bear that in mind, and I'll cover that a little bit later with regard to making sure that you're not paying tax in both jurisdictions. Okay, moving on swiftly. Okay, so a general theme that you will see throughout this presentation is what the French do is they actually take from the general sort of thing is they take from the rich and give to the poor. It's all a little bit Robin Hood. And while the British tax system pretends to do that, the French system actually does do that. And you'll see this as we go through with a few of the slides. So if you're a high income earner, this is something that they slap on top if you start moving over the 250,000 in terms of personal income. Okay, they'll slap you on another 3 or 4% depending on which banding are in there. Okay, so just bear that in mind. Another theme that you'll see as we go through this is even though the French taxes on paper are relatively high, the French don't like paying tax either. So there are always ways of mitigating these things. Unfortunately, you can't really find them out with a quick little Google search. You have to speak to someone like myself who knows how these things work. But I'll touch on a few of them now as we go through these things. Okay. This, however, is one of the more difficult ones to mitigate. But the others, as you'll see, I'll touch on a few ways of how to do those things. Okay. Okay. Here's a big one that quite a few people fall afoul of. And that is the real estate wealth tax. This is a watered down version of the wealth tax from pre-2017. So the French realized after a while that they needed to encourage people to come to France. And this was one of the things that they did in order to do that, because there are some high profile people leaving France and making a big noise about it, like Gerald Depardieu and a few others, and it was because of the high tax thresholds, and so they realised they needed to do something about that because they wanted to attract people into France. They were all heading off to Spain and Portugal, and Cyprus, and things like that. So they needed to do it, and this is one of the things that they did. And the other thing that they did, I'll touch on later on. So a lot of rubbish written about this on the internet. Yeah, so this is how it actually works, and I'll go through that now. So you're only paying this tax if you go over 1.3 million euros in the value of your property in France. Okay? And you're only paying the tax on everything over the 800,000. So, like I said on the screen there, if the net value of the taxable property exceeds 1.3 million, then the first 800,000 is exempt. Yeah, so a lot of rubbish about it being 800,000 on the internet, that kind of stuff. No, it's 1.3, and then you're only paying everything between the 0.5 on everything between 800,000 and 1.3. Okay, if you have properties back in the UK or anywhere else for that matter, yeah, then you've got 5 years before that counts towards this 1.3. Yeah, so you've got time to do something about those properties. Continue renting them out, sell them, do whatever it is that you need to do to mitigate this tax. Okay, this is one of the easiest taxes in France to mitigate. And I'll give you an example. Okay, what a lot of the French do is once they get to 1.3 million and there's a couple in the house, yeah, they legally separate. It's a little trick that they do. A lot of them do that. That's why they've got quite high divorce rates in France. But you don't actually have to divorce in France, believe it or not. You only have to separate. So you go to the tax authorities, you tell them that one of you is living upstairs, the other one's living downstairs, and that 1.3 then doubles because it becomes one for each individual. Okay, and it goes to 2.6. There are others. There are other ways of doing it as well. So don't worry about this tax. A lot of nonsense written about it on the internet. Lots of very easy ways of mitigating it. Okay. And you don't have to worry about if you've got a bit of a property empire back in the UK, and a lot of people do, you know, we're all kind of Thatcher's children, bricks and mortar, then don't worry about it. You've got 5 years to do something about it. Okay. So I'll move on from there. movable properties. I don't want to spend too much time on this, but there's a tax that we have in France that doesn't exist pretty much in the UK. It is basically a tax on anything that's not bricks, okay, which sounds really scary, and it isn't. All right, so basically this is anything that sits inside your house or is sitting outside in the driveway, like your cars and things like that. So if you're making money on those things, yeah, that's when the French tax authorities are interested. So I'll give you some examples. So if you've got some fancy paintings in your house which are rocketing up in value, or if you've got a fleet of Lamborghinis outside that you're renting out, you may attract attention by doing that. But this is a notoriously difficult tax for the French to collect, number one, because they don't go knocking around on people's front doors to check what's in their houses. And the other thing, of course, is most people, what sits inside our houses is depreciating assets. And it's very hard for them to prove otherwise. But just wanted to let you know about it. It's really nothing to worry about. Okay? Okay, moving on swiftly. UK pensions. All right, I'm going to spend a little bit of time on this because a lot of people who move overseas have UK pensions for obvious reasons. State pensions, I'm not talking about those. Okay, state pensions, you collect those when you can at the age at which you can do that. I'm talking about private pensions and occupational pensions. Okay, so what I'm going to do is make a very long story short and give you a little bit of history as to why this is an issue, and it's to do with the European Union. So back in 2000, early 2000s, when we were members of the European Union, remember those days, we were inundated with different laws from the European Union. Okay, so they threw those at us. We made them law. They are, strictly speaking, directives, and there was pressure from the European Union to make those directives law. So one of the directives was from 2003 to do with the freedom of movement of people and the freedom of movement of capital. Obviously, that capital included pensions. So all HMRC did is in 2006 they made it law. And from that day onwards, anyone with a UK pension, doesn't matter what colour their passport, had the right to take their pension out of the UK and take it with them into the European Union. Okay. And this is HMRC legislation. You'll see it there sitting on the HMRC website now. There's a list of approved schemes that HMRC approve, often referred to as QROPS, which stands for Qualifying Recognised Overseas Pension Schemes. So the clue is in the name. They need to be qualified by HMRC. They need to be recognised by HMRC. They need to be overseas. They need to be a pension scheme. And they need to be on that list for you to move it. So that happened, and HMRC then put their feet up and thought, well, not great. Some of this money is going to leave the UK, and we won't be able to tax it directly. They were wrong. It was terrible for them because they totally underestimated what would happen. They never foresaw in a million years that this would mushroom into a massive pensions transfer industry. And to the point where in the first few years, it was just a few million that was moving out. After a few years, it turned into billions. Yeah, massive hemorrhage of money that they couldn't tax directly. And they didn't like it. Yeah, they did not like it. So all this money starts flying out of the UK, which they can't tax directly. So they tried to scramble and do a few things to try and stop the bleeding, but it was all a little bit too late. So there are some massive advantages to moving out, which I'm not going to go into too much detail, but a couple of real simple ones is how much your spouse is taxed when you pass away. So most people are couples, or they're interested in who their beneficiaries are. So when they pass away, you've got a UK pension, you're most likely going to be subject to income tax, or your partner will be, when you pass away. If you've got an overseas pension, there's no income tax, nothing. So if you've got a large pension of, say, $500,000, we're talking about 200 grand. Yeah, that's huge. Also on how the pension is taxed when you start drawing down on it. There is a double tax agreement between the UK and France. However, that doesn't stop the UK from taking the tax off first. So if you've got a pension in the UK, you start taking it down in France, what the UK tax authorities will do, the wonderful HMRC, is they will start taking tax off it at source. You then need to make up the difference in France. That takes months. Yeah, and it's not even funny. Yeah, it's very, very painful. A lot of paperwork. Don't do it. If you've got an overseas pension, you've got the chance to get paid gross. So say you wanted 50 grand out of your pension in one go, you have the same flexible drawdown rules, but you ask for 50 grand turns up in your pension, in your bank account, sorry. Yeah, you ask for 50 grand, that's what happens. If you do that from a UK scheme like a SIP, then you're probably about 30 grand turns up. Yeah, and then you have to make up the difference. And as any accountant will tell you, it's always best to be paid gross, and then you declare that money in the country of your residence, in this case, France. Okay, and obviously there's going to be ways of mitigating some of that tax, dropping yourself into a lower tax bracket, all those sorts of things. You don't have that choice if it gets taken off at source. And loads of other stuff as well, currency and all that sort of thing. But I don't really have too much time to go into those things now. Okay, so but it's huge advantages. If you're in a situation where you've got UK pensions, it's all very bespoke. Yeah, it all depends what type of pensions you've got. Contact me afterwards and we'll fix a meeting to speak. Okay, this is something that you definitely need to sort out before you go out. Otherwise, it's a square peg, round hole. And why are you in the overseas and paying UK tax? Why do you come under UK tax rules? Why are you paying for streets to be cleaned and bins to be emptied when you don't live there anymore? Yeah. Overseas pensions are designed for people overseas. UK pensions are designed for people in the UK. So if you've got any issues like that, any kind of pension, speak with me. I'll help you sort it. Okay. Right. Inheritance tax. This is fun. Okay. Inheritance tax in France is a little bit odious. Okay. As you'll see from these bandings here. Right. But there are ways of mitigating this as well. Okay, it's not like in the UK where you can mitigate all of it. Yeah, you can mitigate some of it. Okay, but a good chunk of it. Yeah. So as it currently stands, as it says there, 100,000 for each child, 100,000 euros, and then you have the bandings after that, at which they are taxed. Okay, there are ways of mitigating that considerably. All right, if that's something that you're worried about, speak with me. I'll show you exactly how to do it. Okay, that's something we definitely help with. Yeah. UK tax, on the other hand, UK inheritance tax, you can mitigate all of it, but you just can't do it on your deathbed. Without wanting to go into too much detail, there was a famous quote, I think, from one of our previous chancellors. I'm trying to remember his name now, Lord Jenkin, who said, inheritance tax in the UK is a voluntary tax that you pay if you like the inland revenue more than you like your children. Okay, that came from a Chancellor of the Exchequer. All right, so, and it's very true. You just can't do it on your deathbed, though. You need to organise it, and there's two ways of doing that. That's something we can help with as well. But yeah, if you move to France, because of the double tax agreement between France and UK, you will come under French inheritance tax. If that's an issue for you, come to me. I'll help you mitigate it. Okay, nice and simple. And then finally, tax on traditional assets and portfolios. Okay, so again, a little bit of background going back to 2017. This is the other thing that they did that I referred to earlier about sort of watering down or encouraging people rather to bring their money into France. Up until 2017, there was no encouragement for people to do this. Okay, and the law has stayed the same. It's just that there's been a new product that that the French have allowed to be used since 2017. Okay, if you have any assets either within France or outside of France, and I don't care what they can be premium bonds, they can be money just getting in cash, getting interest, it can be on brokerage account, doesn't matter. Yeah, the French will find out about them, and the French will tax them for capital gains tax. Okay, it's either 30% or you get to choose between that or income tax. Yeah, so either way, not nice. Okay, and there's no way of hiding it offshore these days. The days of hiding these things offshore and sticking them in trusts doesn't really work. The French don't recognize trusts. Okay, you stick it in the trust, they'll come after it anyway. And there's another thing called common reporting standards that some of you would have heard of already. Okay, so that is a copy of what the Americans did, FATCA. Okay, so the individuals are not responsible for reporting that they've got money overseas. The institutions are. So you change your tax code with an institution, they immediately inform that new jurisdiction. Yeah. So these are the things, and then there are ways of them finding out that you've moved and all this sorts of stuff. Don't go down that road, and you're not incentivized. There's no need to do that anymore in France, because in 2017 they invented a product which basically mitigates the capital gains tax, mitigates a big chunk of the inheritance tax, and mitigates a big chunk of income tax. Okay, so there's no incentive for you to do it anymore. And they knew they needed to do that. They knew they had to do something, because otherwise people wouldn't come to France, and they were getting out-competed by, the golden visas programs of Portugal and Spain, which are now defunct. But yeah, they knew they needed to do something, so they did. So this is something that an awful lot of people in France have. It's the only show in town. When I've lived in other countries, there's kind of been like different choices, different shades of grey. In France, it's really easy to give advice on people's investments, because there's only one show in town to put it in. If you want to mitigate the capital gains and you're doing well out of your investments, you simply put them under the French umbrella. You can keep them in the same investments if you want, if you're happy. Just don't leave them in the UK, especially your ISAs. Yeah, that's another one. So what they do if they see you with an ISA is they'll backdate the ISAs to when you opened it and then tax you for all those years. Yeah, don't do that. Yeah, there's no incentive to do that. Just bring your money into France, take it from your left pocket into your right pocket, keep it in the same investments if you want to. Just make sure that you don't do that. If you want help with that, come to me. That's exactly the sort of thing I can help with. Yeah, mitigate your tax with the French tax authorities. We all have to pay tax. That's a given, but there's no need to. Like I said on the last program, there's no need to leave a tip. All right. So yeah, that's the most important thing. You want to get in touch with me or set an appointment? Get in touch and ask questions. Drop me an email. It's probably best at the moment. So I'm very, very busy. You want to fix an appointment? Click on the QR code there. Yeah. And sorry I went on. There's a lot more I need to cover and want to cover, but we've only got half an hour, so I think we'll go on to questions if that works.
Yeah, lovely, Malcolm. Thanks very much. That was that was great. It just kind of highlights there's an absolute minefield out there. There's a lot to think about when buying a property overseas, and you've got this part of the process, you've got currency exchange, you've got finding the property. But to have it laid out like that, I think everyone will find it really useful. So thanks so much for sharing, and also thanks for all the efforts and time that yourself and Chase actually put into helping clients undertake similar journeys as people listening in now. I think it just highlights the importance of being aware of it, educated on the potential tax implications of moving overseas, but also how you can navigate them by speaking to an expert that knows them in and out. So thanks a lot for that, Malcolm. What we'll do now, we'll go across questions as you mentioned. We've got about 5 minutes. I know there was a couple of late joiners that I saw pop in, but if you do have questions, bottom right-hand side of the screen, please type them in there, and we'll start going around. We'll go through them now. Malcolm, one question that we've got here from Jane probably alludes to a few points within the presentation is, I suppose, when's the best time for someone to get in touch if they're thinking about buying a property over in France, and how do they actually go about speaking to yourself or a member of the Chase team?
Well, come through to me. I'm the number one guy when it comes to France. Best way is drop me an email. We'll fix a time to speak, or click on that QR code if you want to go straight into my diary. So that's absolutely fine. In terms of what time to do it, very good question. I would say when it becomes, when you're a little bit further on down the road to finding a house, I'm not saying at the very latest, you should be doing that before you put down the deposit.
Okay.
Yeah, you should be speaking with me because you need to, because of with your assets in the UK that you've built up over time, big or small. It's always good to have a clear mind and think, okay, I roughly know what I need to do with those. So you don't have that sort of cloud hanging over you when you're going to look for the house. Yeah. So the earlier, the better, I say. But at the same time, I would say, I suppose you would get more out of it, I guess, if you were to speak to me just before you're about to purchase. And then I can, go through everything. At the very latest, that'd be the point to speak with me. Yeah, because then you'll have looks like you're having a French address, all that kind of stuff. And then, the ball's moving. And it's at that point that you really, that's the very latest. You need to speak to me before then, really. But it's kind of different for different people. Some people take years to make these decisions. Other people do it in just a few weeks. Yeah. So you'd be amazed. Some people are very, very quick, come back from a holiday and say, right, that's it. We're done with this UK nonsense. We're off. And I get it. Did that myself once. So no, please, it's a little bit how long is a piece of string kind of question. Yeah. Whenever is good for you, but not after you've put the deposit down. You need to speak to me before then.
Yeah, it's a really interesting point, and it's across a lot of services that people need to think about when buying a property. I think I understand why the general view is you need to find a property first before I start thinking about this part of the process, which to a certain extent could be true. But I know once a property can be found, things can move fairly quickly. I know you've got the complicated bond and things like that in France. You've got a bit more time, but at least being aware of this part of the process, at least having the contacts and the connections in preparation for that property being found and hopefully progressing quickly to finalise. So thanks a lot for the question and thanks for the answer, Malcolm. We've got a question here from Lee. I just came through at the beginning of the presentation, so I think you may have covered it off, Malcolm, but just to recap. So Lee asked, are investments which are held within a tax wrapper in the UK still protected from income tax? Should I retire to France?
Good one. So the way that works is it kind of depends when you purchase the tax wrapper and what's in it. So that can get quite complicated. So if you got that and you're going to France, then speak with me, set an appointment, and we'll look at what it is you've got, because it depends very much on when you opened it and what is inside there. So tax wrappers, it's quite bespoke to those. You only get taxed, though, when you take the money out of the tax wrapper. Mm-hmm. But as to how much tax you pay will depend on when you opened it and how much is in. So speak with me about that, because that's a very bespoke conversation. Yeah, good question.
Yeah, thanks, Lee. Great question. And thanks for answer, Malcolm. One last question. So I know we're running out of time here. And as I said, we will pass the rest of the questions across to you after, Malcolm. Was around, you mentioned ISAs. Is there a French equivalent of UK ISAs and premium bonds that are more tax efficient? Is that
Yes, there is. Yeah, think of it as like an ISA on steroids is what the French have. Was what I was alluding to earlier, really. Yeah. And that is something that we actively encourage clients to do, because there's 23 million people in France who have one of these. That's 40% of the adult population. Oh. Yeah, they're common as muck. Everyone pretty much has got one. All the banks do one, but what you don't want to do is use the banks for one of these things, because obviously they are very retail. They'll grab something off the shelf and give it to you with all sorts of additional costs and stuff like that. You don't want to do any of that. That's some of those products are quite nasty. So come to us. There are institutions outside of France, not just inside of France, that do these things. So we can show you the right ones to do that don't cost an arm and a leg and don't have all the restrictions around them like the bank ones do. The banks just take advantage of their high street position, if you like, and the fact they're dealing with retail clients, and then they slap on a load of charges and hey ho, isn't that how they work, right?
Yeah, absolutely. Okay, great. No, it's interesting to hear and great to know for everyone listening in. That's unfortunately all we've got time for today's session. But thank you for everyone that's joined and listening in live and also on demand. You're one step ahead of the pack at the moment, so to speak, because this is such an important part of the process, and it's great to know that you are at least aware of it now. We would strongly recommend and advise speaking with Chase and Malcolm at Chase for your plans over in France. So please do, book in those appointments using the QR code on the screen. And Malcolm will be happy to help you on your journeys overseas, as he has done with countless other clients undertaking similar journeys. So thank you very much to everyone listening in. And Malcolm, of course, thank you to yourself. You've been a part of a few of these over the years, and we really appreciate all your guidance and help that you've offered people, and today's been no different, so thanks very much. We've just popped up a Trustpilot link on the page, so if anyone's found it useful, which hopefully you have, please leave us a review on Trustpilot. We'd really appreciate it. And Malcolm will send across all of the questions that we didn't get around to answering today after this event, and we'll speak soon.
Great.
Cheers, Malcolm. All the best.
Thank you. Cheers.
Take care. Bye-bye.